Well, what is going on, guys? Sayed Ahmed here, back again with another YouTube video. Today's YouTube video will be on how I made over $100. Yes, you heard that right. Over $100 trading the S&P 500 index, and how you can do the exact same thing. So if that sounds interesting to you, make sure to watch the video till the end, because I'm going to describe the exact process that I used to make $100+ plus. Well, it was $150 to be exact, but not to be exact, around there. But yeah, so make sure to like the video, comment down below, and subscribe to the channel if you want more content like this. All right, let's get into it. Oops. This isn't the trade. Well, this is actually, I'll just show you guys all the trades. I won't go over them, but these are all the trades I took today. This was Euro GBP buy. This was the last trade I took today. This was the second trade I took today. This was a Euro NZD buy, and they were both losses. And then this was the S&P 500 trade. Sorry, they were not both losses. I don't know what I said. I meant the Euro GBP was a buy and it was a win. And Euro NZD was a loss. And that was a buy as well. Okay, cool. So let's load up the chart real quick. Trading view always lag. I don't know what it is. But let's get to it. Come on. All right, cool. So let's break down exactly why I took this trade. So for those of you guys that do not know, this is the S&P 500 index, which is a combination of the top 500 companies in the United States, of the United States market. And it's essentially used to track the general, how essentially companies are doing across the United States. And so it's also seen as a sign of economic strength. So when the S&P 500 index is doing good, that means companies are doing good. They have a lot more employees. They're making more profits. They're making more revenue, so people are spending more and the economy is doing well. And if the S&P is doing bad, that means the likelihood is that the economy is doing bad as well. And a lot of people do trade this, a lot of people do actually invest in it. So there's a lot of volume in this as well, which is one of the reasons that I chose to actually start trading this as well. I want to kind of expand my horizons a little bit. You know, Forex is cool and all, but a lot of the bigger traders, as you see, we're talking about QBanks, Lambert also recently, he started trading indices. He's trading US30. So yeah, a lot of these bigger traders that make a lot of money, they usually trade with indices. So I was like, screw it. If I want to level up, I got to do the exact same thing. So that being said, from 9 o'clock to 9:30, right? S&P 500 index opens, the US stock market opens at 9:30 p.m. 9:30 a.m. Eastern Standard Time, right? So I live in New York, so I follow Eastern Standard Time. So this is all going to be the exact same times that I'm saying. Are they going to line up with whatever times the market opens and market closes, right? So what I did is I got this indicator, right, called vertical line Chris Chapman. So time 1 is set at 9 automatically. Time 1 again, the second one though, you have to adjust to 9.3. And for style, you have to deselect these last two. And these first two, I just change the color to yellow. You could leave them the default colors. It doesn't really matter. But the importance of this indicator is it's going to tell you exactly what time, what candles are the 9 o'clock, from 9 o'clock to 9:30. It just makes it easier. Honestly, you don't need this indicator, but I like it. And the reason why this indicator is or the reason why you need to know that is because those are pre-market volume, right? That's pre-market trading going on. That's before the market has opened, right? And generally speaking, pre-market, or when people are taking profits, maybe they're buying, maybe they're holding positions, right? So you're seeing what people are thinking of before the market has opened and their actions before the market has opened, right? And chances are their actions are determined by yesterday's results. So yesterday's good, right? And they bought down here yesterday, and all of a sudden the SP gaps up. Chances are pre-market 9 a.m., right? They're taking profits and they're selling, right? So what a lot of times what you can know is that based off the pre-market, the S&P or stocks might move in correlation to pre-market levels. So that's the exact reason why this indicator comes into play, because from 9 to 9:30 or pre-market levels, or when pre-market opens. And so what you can do, what I did at least, is I went to the highest point on the pre-market, which is this candle, and I plot a horizontal line from them. And then I go to the lowest point, which is this candle, and I plot a horizontal line over there as well. Well, it didn't plot for some reason. Okay, so now I have these two levels. So there's a pre-market high and the pre-market low. These two levels are essentially seen as support and resistance, right? And as you can see right over here, what is that at the pre-market low, right, we have massive support, right? I mean, you're seeing all these wicks, you're seeing all these rejections, you're seeing the bulls stepping in, the bears stepping in, right? And yet you're not seeing any sort of breakthrough, right? So this is not going to be, it's going to be based off a breakthrough trading strategy, but it's not exact. We're not going to be trading the actual breakthrough, right? So as you can see, the pre-market low is being used as support. We see a bunch of wick rejections. We see a strong bullish candle. Okay, so now the pre-market high has finally been broken at 942, and we're trading on the 1 minute chart, guys, just to be clear. So it is, we are scalping. We are super scalpers right now, right? So if you don't like scalping, this video might not be for you, but I digress. It is what it is, right? And so what we see finally is that at this 942 candle right over here, we have the market breaking the pre-market highs. And not only did it break it, but it also closed it above. And so that's my sign that chances are we're going to continue bullish, right? Because not only did we have support at pre-market lows, we had strong bullish momentum, right? And we had engulfing candles, and we closed above the pre-market high. So now, not only me, but a lot of other people trade like this. So they're thinking, okay, we're going to go bullish right now. And a lot of other people would just take the breakthrough, right? But I'm not that type of trader. I like confirmation. I like to be a little bit more risk averse. So what I'm going to do is I'm going to wait a little bit more. And what I wait for is the confirmation that actually we will be holding the support at pre-market high. Because as you can see, price comes a little bit up, comes a little bit down, we retest the pre-market higher, and we get a rejection, and we start to go up. So now what I want to see is I want price to actually come back to pre-market high. Now, why do I want them to come back? Because we already know price can go up, right? You already know there's bullish momentum and continuing bullish momentum. However, we don't want to be buying at the highs. We want to be buying at the lows, right? And what is the low going to be? Probably support or resistance to turn support. And in both of these scenarios, or both of those examples, the same exact level was, it was the same exact level, honestly. And that was the pre-market low, pre-market high. Sorry, I don't know why I can't talk today. But regardless, you see this level of support is formed. And so I want price to come back here. Now, what ended up happening is that I start to see rejections and I'm looking for confirmation. As you guys know, I like to trade very, very objectively. This is where this QQE mod comes in, right? As soon as, I'm not going to explain what this indicator does, right? But I'm just going to say why I took the entry. As soon as this candle, as soon as the QQE mod shows another signal, a blue signal, that's going to be enough for me to show that bullish momentum is again stepping in and we are going to go even higher. Right? That's why I took the trade. So as you can see, price actually ended up gapping up. And at this candle closure, at the 10:08 candle closure, we see the QQE mod shows a blue histogram, which means that it's my entry confirmation to start buying. And that was it. So I actually ended up getting a little bit late. However, it worked in my favor because as you guys can see, the candle was a little bit higher. With spread, it should have been a little bit higher. My original entry should have been like around here with spread, maybe a little bit lower than that, honestly. But I actually got a really good entry because of that. And now this is where the ATR bands come into play. This is for stop loss placement. Now these are the original settings for the ATR stop loss, right? 14 and 1.5 multiplier. And yeah, you really don't need to twiddle those or change those, but you can if you want to. You can have a tighter stop loss, which will be a little bit more risky. I found through my testing that the default settings work really well. So as you can see, my stop loss was not placed just arbitrarily. It was placed off the ATR bands. And that works really well, honestly, because otherwise I would have had to have a much wider of a stop loss, right? If I was placing it based off the support level and the pre-market high, I would have had to have a wider stop loss, which means I would have still hit take profit, but I would have been in the trade a lot longer, and you don't really want that. So yeah, this was my original trade, entry, stop loss, and take profit. As you guys can see, a little bit of drawdown, wick rejections at this pre-market high, right? Again, what did I say? We want confirmation that the pre-market high is going to go from resistance, flip from resistance to support. We got this confirmation here. We see the double bottom. We see the strong price action. We see the entry confirmation at the QQE mod. And now guess what? Because we had all of those confirmations, guys, price was still acting, or the pre-market high was still acting as support. So I had no fear when this was happening, guys, right? I mean, look, if it went down, if it hit my stop loss, that would have stopped, right? But it is what it is. We move on to the next trade. Now, however, because of all these other factors, I was confident that pre-market high would still be considered as a support level. And that's exactly what happened. We see these wick rejections, we start to see bullish momentum, and my take profit was hit. I was in this trade for what, maybe like 15 minutes at that. I don't know. I don't really care about how long I was in the trade. But yeah, a couple things to note, guys, is that I do like the strategy because it's a one trade a day sort of strategy, right? You only need to trade once a day. And that's if it breaks the pre-market high or the low. So it's really easy. You're only focusing on one pair as well, which makes it a lot easier because you don't have to shift through a bunch of different pairs. You're only focusing on one pair. On top of that, it's pretty objective, right, guys? We have the pre-market high, we have the pre-market low. We're just waiting for a breakthrough. We're waiting for it to come back to that, show signs that it's holding us or holding as resistance if it was to break down. And then we're just looking for an entry confirmation at the QQE mod. And chances are, guys, if you're like, well, I don't know if it's going to hold that support, it's not really that big of a deal, guys. Don't make trading more complex than it is. You're just looking for wick rejections, and you're just looking for the entry confirmation of this QQE mod, right? We see a couple of wick rejections right over here. Let me get this up. Like we see wick rejections right over here, and then we get a bullish histogram shown, and we take the trade. And if we were looking for sells, guys, it would be the exact same thing, except we would just be looking for the bearish histogram, right? Now, a couple of things also, just to explain to you guys, is that after the breakthrough, we see that there are all bullish histograms, but you don't want to take the next bullish histogram. You want to wait for price or the histograms to actually flip either gray or red, and then take the next one after that, right? And so as you guys can see, once that ends up happening, we flip gray, we flip red, and then we flip blue again. That's when I took the trade, right? Otherwise, this breakout candle was blue as well. So it's not just about taking the first blue histogram you see. It's about having once it's breaking through, then you take the next blue histogram. And that next blue histogram you'll only take if prices or if the indicator flipped gray or red at the histogram, right? So I hope that makes sense to you. I'll do another video explaining the QQE mod indicator maybe later, but this is not the time for that. And yeah, that's about it for this video, guys. Make sure to like the video, comment down below, and subscribe to the channel. Peace out, guys.